Small account strategy class, July 14th. After the day I had here today, I don't feel qualified to teach this. this was uh, this was a red day for the Mr. Reach. So hopefully I can make turn this thing around tomorrow. Had two good days in a row. Monday was an excellent day. Yesterday, so. Today, kaboom. And mostly because I was dicking around with Tesla. And it giveth and it taketh away. So we'll see where she opens up tomorrow. I've got one position left in it, really tight deltas. But let's get into the strategy class and figure out how we can make money with a small amount. Okay. Everybody here that wants to be here? I'm recording this as well, so. Uh, so let me type that in. Okay. So if you take a look on the left-hand side and scroll down a little bit, you can see I created a new category, which is called the Small Account Challenge. And inside there is a strategy document. That's a draft that I threw together. I'll probably update it as we move along to get to a final draft because this is a constantly changing not the strategy is not constantly changing, but how we implement it will change depending upon how quick we can grow the account. Okay. It's not a static model. It's not the kind of model that I've taught in the past where I find a fundamentally strong company that I think is undervalued and buy options out into the future and then sell against it over and over and over again to generate income. It's not that kind of strategy. This is a strategy where we're going to be looking at shorter term plays, a month out, 2 months out for the strikes, and shorting to hedge on the swing, probably 2 weeks, 2 to 3 weeks inside of that. So essentially, this is a simple execution, right? It's not hard. It's not doesn't require an extensive knowledge of options. But during the course of naked calls with short with tight stops for reversal plays, Sornak, you want to join me on here? You're really good at asking questions. You want to join me on here and be part of it? You can, because you can't right now. Okay. There's naked right now. The way I have it set up is I have it set up, or the naked calls are intraday, meaning for during the course of the day, right? So J-Man is there typing. Oh, J-Man, I wanted to tell you about tomorrow. We're going to make a move on um, PDD. Where did I close that? 108.94. We're going to have to either close it or roll it. Glad I introduced you to credit spreads, right? Yeah. Kill me. I'm the one that put the trade up there. It looked like a no-brainer. I said, "Here's a no-brainer trade." Yes, naked calls you can use during the day if you want to on this. I mean, this is not something, Sornak, where I would look at a an approach and say this is it. It's the only way to do this. There's a number of different ways to do this. So naked calls, if you're comfortable with that, have that as part of your strategy. I haven't put that in to begin with because yeah, stops are very necessary. But you're talking about swinging naked options, right? Um, Set that aside for now, okay? Let me go through this and we can discuss different ways to adjust depending upon what your comfort level is for risk and your knowledge, right? So what I'm looking to do here is I'm looking for trades that can produce somewhere in the area of 30 to 75 to 100% on really good trades over a period of 1 to 5 trading days. Giselle, for the most part, credit spreads, you can employ those in this strategy. You're going to find that you're going to use a lot of buying power. So for credit spreads, what I would do is I would put I would put a credit spread on and swing it and look to close it the next day, 2 days at the most, if you're going to do that, so you don't tie up your capital for long periods of time. The credit spread strategy we have used up until now is buying a credit spread for maybe 45 to 60 days out, and looking about halfway in from that, halfway in from 45 days, let's say at 21 days, 22 days, looking to close it at a 50 to 75% profit. We don't want to do this with this strategy. We want to churn this account. This is an account we're going to trade over and over and over again, okay? So what I'm looking to do, again, short-term swings designed to capture 50, 30, 50, 75, 100% profits over a period of 1 to 5 trading days. It's essential that you take profits on this strategy. We don't want to deal with drawdowns. If there's a drawdown, it's going to be a small drawdown. You take your losses, lick your wounds, and you move on to a different trade, okay? You want to churn this account and take your profits quickly and reduce your losses even quicker, right? So don't worry about credit spreads, Giselle, because I think the faster growth is going to come from debit spreads, either on the call side or on the put side. Okay. So we're starting out with $3,500. That's the allocation we're starting with. If you want to start with more than that, you can, or if less than that, you can as well. But that's the number that we decided on after taking a poll. Falls halfway in between, where people wanted it at 5, bunch of people wanted it at 5, bunch of people wanted it at 2, so we took 3,500 and split the difference, okay? What we want to do is we want to take 2,500 of that, up to 2,500 of that during the course of any given week, and put it into swing option trades using both short-term debit and credit strategies. And those debit strategies and credit strategies can be on puts or they can be on calls. A decent mix will help fuel the growth of the account during red and green days, right? So you want to have more than one ticker that you're in. You don't want to just take your position in one ticker. You probably want to have 3 operating at one point in time. All right, so you don't concentrate your account in any one sector or any one ticker, right? And you don't concentrate your account in just long only positions. I think you need to balance based on what the market's doing, what the sector you're playing in is doing, what the particular ticker that we're interested in is doing. You want to balance that with both calls and puts, all right? Once we open a trade, you're going to want to you want to closely manage it. We don't want to lose any more than $250 per trade. So at that point, we stop, we get the hell out of it, we find something else. If you want to make your stop even tighter, you can do that, all right? That's 10% of the capital we're deploying. So that means that you'll increase at $250. You're going to have 10 straight losses to have a major impact on your balance. Unlikely, right? Unless I'm the one calling out the trades. We want to reserve. Man of the people, man, I owe you a beer. I owe you a case of beer. I owe you a keg of beer for that trade, man. I really do. I really do. So we're going to roll that tomorrow because we don't want to get assigned on it. We're in the money on the short side. Yeah, no, I brought you back. I reeled you back in. You were almost away. You almost got away, and I reeled you back in. And I said, we can do this. So anyway, back to the small account. We want to reserve $500 to $1,000 for scalping opportunities, keeping in mind that you're under the PDT rule here. All right, there's no way around that. All right, you can't do any more than 3 trades over a period of 4 days, and if you use Tastyworks, which is what I'm using, it gives you a count up on top of the trading platform. It shows you how many day trades you have available to you. Okay. And when you get to 3, you're maxed. You can't go over that, or else you're going to fall into a pattern day trader rule violation, and they may shut your account down for a period of time. One thing about Tastytrade that you should be aware is that they have a get out of jail free card once every 90 days. So if you pop over that 3 mark one time in that 90-day period, the next day you can go into your account and you can reset it. It resets the day trades back down to 0. You can do that once every 90 days. So if for instance, you make a mistake, you close down a spread, and the short side of the spread was something you opened that day, and you're already at 3 day trades, and it pops you over to 4, you can go the next morning, clear it, and you have one 24-hour waiting period then. So let's say you cleared it. Let's say you did that today, and you clear it tomorrow morning. On Friday morning, you can open up any kind of trades. You're back to normal. All right. So what we want to do is reserve $500 to $1,000 to scalp, preferably Thursdays and Fridays, playing really high beta ticks like a Tesla or an Amazon and the like, because the contracts can be had on the cheap on that day. Okay, guys, just ask any questions. Just jump in with any questions. So we're going to roll this out tomorrow. I'm trying to find a trade to open up with tomorrow. But what I've been doing and pulling this together is spending a lot of time trying to find the right tickers that we can put in that category of the small account. And if you take a look to the left under small account challenge, there's a list of tickers. Some of those are left over from hot tickers that we were following, the top 20. So I may pull a couple of those out of there. For instance, Billy just has turned into a nothing burger as far as trading recently. And I'm going to be fine tuning that list, and inside of each one of those categories down there, each one of those channels that lists a ticker like a Billy or a Baidu or a CrowdStrike, I'm going to open that up so anybody can put what they want in there. I'm also going to open up the entire category, the small account challenge category, so you can add a tick. Anybody will be able to add a tick in there. The point of can't get the volume. Can everybody hear me okay? Yes, okay. So I just want to make sure that it's not on my end. Had some problems since I got hacked. All kinds of problems. I spent days on this. So I even reached out to the guy who started Discord. I sent him an email. He has not responded. So I guess I'm not a big enough fish for him. Maybe he will. Who knows? I'll send him another one. I was nice and polite too. So anyway, back to the tick criteria. This is what I have so far. We might add. We're going to add to this in terms of the trading channels, when to get in and when to get out. But screening, we're looking for ATRs that move 5 to 75 a day. So those are big. The 75 is obviously big, wide ATRs. They're going to be associated with the larger cap accounts. Those are ones we're probably going to have to trade as a spread, go in as a spread and get out as a spread. Looking to pick up 30% on it. 30% on any spread is a really good profit. You should be happy with that. Okay. I'm looking for wider ranges to take advantage of moves in the market during the course of a day, because one of the things we're doing here is we're swinging covered with a hedge every night. So every night you're making sure the positions that you have in place, the calls and the puts you have in place, are hedged with a tight delta, which means that on a gap up, you're going to not make much money. On a gap down, you're not going to lose much money. But the point is to have that there, and then as the market opens, make a determination as to whether or not you want to pull your short off on that ticker for the day and let it run. Hopefully it runs, right? So the tick criteria, ATR 5 to 75 points a day. That's the average true range, okay? The other thing we're looking for is betas over 2. One of the things you have to pay attention to if you're doing your own research on beta is that most platforms do not list the beta on a ticker that has been trading less than 1 year. So all the IPOs would not be listed in there. Newer IPOs in the last 12 months would not be listed in there. But there is a way to calculate it yourself. I can go through that. I'm not going to do it here. It's a pretty long mathematical process, right? The other thing too that we're going to be adding into this and that you should look at is I put a list in here of highly liquid ETFs, the SPY, the Qs, SPX, EWZ, GDX. You can see the whole list there. USO, XOP. I also have 2 leveraged indexes in there. One is TQQQ. The other is SQQQ. That's a reverse leverage, right? So those are, which means that they move a lot, because for every dollar that the index, that underlying index moves, those are leveraged by a certain multiplier, 2x, 3x, 4x. You have to take a look at each one of those to determine that, okay? So using technical analysis, and this is where our good friends Stealth, who does a lot of technical analysis on his charts, can be really helpful to us, and that's to determine the trading range, the trading channels for different tickers, so that we can figure out the best time to get in. Catalyst will be a part of that. Strong support areas, strong resistance areas. If it's a put, will be the other numbers that we're going to be looking for, and we're looking for a move to happen within a particular time frame. So I'm looking for something that's going to give me 10 trading days out would be ideal. If I can find something that I think is going to give me 10 days, 5 is even better. 5 to 10 trading days, so we can move that over. You can't hear me, Stone? Stone, can you hear me? Why am I having so many problems with this voice thing? Okay. He didn't respond. He's typing in. He can. 8 can hear me. Stealth can hear me. Arax. Come back. He's driving right now. Okay, it's being recorded though. Um, so technical analysis to figure out good entries and good exits. We want to go in. Um, we want to go into a ticker where we think is an excellent entry area based upon what we're looking at for the trading channels, based upon what the market's doing, what the sector's doing, what the industries within the sector is doing that we're trading in, and what's the current trend on the tick, right? We know for a fact that momentum has a way of just continuing, whether it be downside momentum, Tesla, or upside momentum, Apple, okay? So that's what we're looking for. And we're looking for money. We're looking for money options. We're looking for out of the money options, right? And out of the money options with mid 30s delta. So we're looking for deltas in the mid 30s. Those will give us probably the largest potential short-term percentage and dollar gain that we can get on a ticker. Okay. If you're really short-term bullish on a ticker, you can push that criteria up into the 40s. You're getting closer to the money. It's going to cost you more. It's going to cost you more to get into the ticker. But right now I'm using mid 30s, and I think what we can do here as a part and parcel of this strategy is to have a start out with doing things one way and see how it works, right? Because options pricing change all the time. We don't know what the implied volatility is going to be tomorrow. We don't know what the underlying tick's going to be tomorrow, right? And all of that affects the delta and the gamma, which is the pace at which the delta increases or decreases in the case of the underlying going. Okay, so 30s is what we're looking for. We want a strike that coincides with the price target during the time frame of the trade. For instance, we are at Apple's trading at 120. It's not, but let's just say it's trading. And we have a thesis that's going to give us 130 in 10 trading days. We want to select a contract with that strike. With the most money we can make is as it races up from that 30 delta up to the up to hitting that strike in the money strike. We're getting close to the money strike. That's where we're going to collect the most gain on it, right? Then once we select that long strike, right, the long strike, whether it be a put or a call, we want to take the time frame that we think that's going to happen in, and we want to look at contracts that are 2 to 4x that time frame, right? So if we think 2 weeks, then you want to go 4 weeks to 8 weeks out to pick up a ticker, right? That's going to give you a ticker that's pretty reasonably priced, and it's going to give you the largest percentage gain if we get it right, because the closer you get to expiration, the higher the gamma is on the ticker, and the gamma increases the rate of delta at a much faster pace. All right. If you want to play expensive ticks, Tesla, that blows you away. You'll have to buy further out of the money. Look, you'll have to take a smaller delta, like a 15, 20. Reduces your profit percentage, but it could be offset if a tick makes an outsized move. And I bring up Tesla again because I played it constantly in the past week and a half trying to get that trade right coming up into earnings. Have not been successful doing it, but so be it. So if you want to play the longer ones, you're going to have to either play the larger ones. You're either going to have to take a smaller delta, lower delta, pay less money for the ticker. It's going to take longer to make its move if it doesn't have an outsized move because the delta is not big enough to move it fast. Okay. And remember again, the closer we are to expiration, the higher the gamma is on the contract, which increases our returns, potential, but it also increases risk potential. All right. So remember that. I think 1 month out is ideally a place to try to land on in terms of a expiration date. Looking for short-term trades. That's what we want. We want short-term trades. We want to flip this account over and over and over again. We book profits or we pull the plug and move to a different tick. I pulled the plug today on a ticker that I got in a couple days ago. Just didn't have the momentum, didn't have the trend that I wanted, and so the trend actually looked different, exact opposite of what I wanted, and so I just pulled the plug and ate the loss on it. Okay. You want to stay small in terms of each trade size and churn the account to open and close as many trades as you can. If you can, if we find a ticker that has contract prices and premiums that are low, great to open up 2 of those versus 1. And the reason for that is because as we short against these, the next morning when you pull your short, you can make a decision whether you're going to pull all your short or keep one short on, right? That way it protects you during the course of the day if the thing takes off in the wrong direction. Okay? Any questions? Come on, somebody's got to have a question. Example. I'm going to do examples, but I want to do it as a whole. So right now I've just covered the long side. So let me cover the short side, and then we'll go to examples. Okay, 888. So this is the criteria for the text. This is the criteria for the long strikes that we're picking, and now we want to select the hedge contract you're going to short. The hedge contract obviously is one that is further out of the money, either a put or a call, and you want that short contract to be either at the same expiry or a couple expiries inside the time frame. And what we're looking for a delta difference of 5. Now, for all you guys that do a lot of trading, I know Sornak will jump on this one. 5 is a really tight delta, right? So if it takes off on a gap overnight, you're not going to make much money on it. If it takes off in a gap down overnight, you're not going to lose much money on it. Very, very, very small amount. Okay. Keep in mind, you want to select strikes that allow you the ability to open and close short positions easily. So there's 2 things you have to keep in mind. The liquidity of the contract itself. It's got to have enough volume, recent and recent open interest, so that you know you can get in and out of it without having to have a wide spread of the bid and the ask to deal with, right? The other thing is buying power. Once you open that short, you have to have enough buying power to get it back. And does everybody understand what I mean by that? Here's where I can give you an example. Okay, I'm streaming. Can you guys see this? Can you guys see the stream for Tastyworks? Can you guys see the stream for Tastyworks there with my mouse moving around on it? Okay. Everybody see that? So this is the Tastyworks platform. I have a ticker up called Beam. So let's say, for instance, we are bullish on Beam here. I haven't done the research as to whether or not Beam is going to be included. It just happened to be one I was looking at before the market closed. So let's say our thesis here is that Beam is, our thesis here that Beam is going to move to 35 in the next 5 trading days, right? So we want to go out a month in advance, the next expiration month, which is August, and we're saying 35 is what we're looking for. So here's our ticker right here. Okay, here's our expiration. Now, in this particular case, I don't know if this is because it's after hours, but you can see the spread is really wide here. So let me throw up a different one. Let's throw up Apple. Let's say Apple. Let's say it's at 149.15 is what it closed at today. It's still going up after hours. This thing's got momentum, man. big time. Let's say we want to play Apple and we think 160 in the next 10 trading days, which could happen. So let's take a look at the Augusts. So here's your 160, right? The bid is 160, the 160, the ask 166. Nice narrow range, liquidity of 11,000, volume 15K open interest. Beautiful, 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 beautiful setup here in terms of liquidity, right? And for August 20th, if you wanted to catch this one long, if you wanted to go into it, you would select this ticker right here. Okay, you'd be buying it to open, right? That's what you're looking at if you're going to open up an example of opening up a long ticker, right? And we want one that we can close and open easily, which means liquidity, right? Now, this is what we would hold naked during the course of the day. Now it's 2:45 or 3:45 if you're on the East Coast, and we have, or even 2:30, and we want to cover this because we want to swing it overnight to hold the position, but we don't want to hold it naked. All right. So what we're looking to do then is we're going to look to open up the delta is only 22 on that. What's this at? 149. Let's switch this up to 155 then. Let's say our thesis is it's going to 155 in 5 trading days. So you're going to open up a long call for 287 bucks. All right, about 10% of your account. Now we're at the end of the day. It's trading at $2.76 to 287, somewhere in between. It's a good spread in terms of tight. It's got good volume. It's got good liquidity. So what we want to do now is we want to pick a delta that's close to this for a short. Now, if you take a look here, the delta on this is 22. That's a little bit wider than what I want. I'm looking for like a 28 or 29 is what I'd like to get a 5 delta difference to swing this overnight with protection. And I'm not seeing anything at this expiration date that gives me that ability. So let's slide up a little bit to the weekly and see what we get. We're looking for a 29, something like that. You could do a calendar, but that's too far out too. So that's not a good setup. This is too far away from the delta. What's the delta on the original? Delta's 34. So August 13th. 33 there. That's too tight. Plus it's a calendar, which means the gamma on a short strike could run us over. Don't like it. Let's try the week in front of this. August 6th. 30. 19. You could take this one right here, although it's farther away than what I would prefer. So this particular chain is not giving us the ideal setup. But if you're really bullish on Apple, you could take this, let's just say you're really bullish on this, and so you're willing to put the delta spread out more than 5. The delta spread here is 34.19, so that's almost 15. That's a big wide spread on delta. Don't like it at all. Don't like it at all. But let's just pretend we're really bullish on this. And so we decide to take the 160s. So you sell the 112s. So now you're in this position. Now, one of the things you have to remember when you select that strike, besides the delta, which you really want more in the high 20s, but it's not there on this chain, but we'll find another chain that it's on in a few minutes. But let's just say that we're going to take this anyway. One of the things you want to be aware of is that your buying power. You got to have enough buying power in your account the next morning to close this short right here, that 160 short. So you're going to need, depending upon where it opens, somewhere in the area of 112 to maybe 125 bucks, or maybe a little bit less. Let's just say 105 to 125 bucks, something like that, depending upon where Apple opens. You want to be able to have the buying power to close that, which is why when you start playing ticks like Tesla, there's a lot of buying power involved in trying to close one out like that. Let me give you an example with Tesla. Let's say our thesis on Tesla is that it is going to go to 200. Just kidding. Let's say our thesis on it is it's going to go to 700. Yeah, well, here's a nice one right here. So 700 for August. It's got a nice delta of 37. The 700's got plenty of liquidity. You buy it to open. Cost you 2,500 bucks. So we're looking for like a 30 delta to short it against. So let's just see where we find a 30. Oh, we found one right here. All right. So I'm going to take a short strike against that. Now understand, this particular short strike here at 1895, it's going to require you almost $1,900 to close that in the morning. All right. So that's why it's really hard to play these high price ticks, $653 tick, unless you want to go further out of the money. As an example, let's say that you want to go take this and go to 750, or even, let's say we want to go to 800 here. That's only a 13 delta, but you're getting a cheap ticker. You're getting a cheap premium, right? And you're at 13, you're going to want to get a 8 spread, so you can close that down for 300 bucks. So if you're playing expensive tickers, you're going to have to drop down probably under 20 on the delta, and then hope you get an outsized move. So this delta right here, if Tesla goes up 40 bucks tomorrow, this delta will jump into the high 20s. Everybody following me? So if you want to play the Amazons of the world or Tesla, you have two choices. You can go way out of the money and give up the delta, or you can open it and close it as a spread. As an example, let's say we decide that we think 680 is in the works for Tesla. That's a 44 delta, so that's an aggressive trade. All right. So 44, we're going to want to, because it's an aggressive trade, and we're going to run this as a spread, we can probably be a little bit more aggressive on the delta. So instead of looking for a 10, 44, 30, 34, 36, might be looking for 15 or 14, so right here. So that spread cost you $15.35. So you run that as a spread, and what you're looking for is a move of, let's say, 30%. So you're looking to get, let's see, $350 profit on that. That's where you're looking to close it at. And you're going to be protected pretty nicely with this trade. Not extremely so, but pretty nicely. The other thing the reason you have to do this is because it costs you too much to buy these back. You're only talking about $3,500 in the account. We're going to have a bunch of it allocated elsewhere, and so it's difficult to play these kinds of ticks. Let's take a look at something maybe that's a little cheaper that I like a lot. 254. Okay, let's say 260 by next week. Delta's 46. Let's go even further out. Let's say 270 by next week. It's in the expected move, right? So we open this one up, 730. You got a 35 delta. Let's say we drop down here and to take a short at 25 delta difference. Open that one up. Let me get rid of this leg here. You have this one opening. At the end of the day, you're going to hedge it. So you sell a 280, sell to open. And now you got to have this open, and that gives you a hedge so that you're only 10 deltas at risk overnight. And then in the morning, it closes, right? And you're running naked on the 270. Then at the end of the day, or if it tanks on you, then you got to pick a right number to tank. Let's say it moves more than 2.5–3% in the day. You're going to want to jump in and re-short that, or else close the long and reposition it. Important part of the strategy is that you have a level of hedge at the close of the day. All right, maximum hedge is 1-to-1, meaning for every long you've got a short. More aggressively, 2 longs, 1 short. Really aggressively, 3 longs, 1 short. Okay? I think that in the beginning, since we're starting out with such a small amount of money, you're better off going 1-to-1 on the hedge. You're better off preserving capital in the beginning of this strategy so that you can live to play another day versus having your account blow up by a bunch overnight. All right. So in the morning, we're taking that hedge off. We've got this hedge on overnight. It's Wednesday night. We wake up tomorrow morning. We pull this hedge. All right. And we will determine the timing to pull it based upon what the market's looking like in that day and what the ticker's looking like. If it's running and it's got an upward trend, you'll pull it right away. If it hasn't given you a direction for the day yet, you're going to want to sit on it and wait until you get some sort of direction on the underlying ticker for the day, and then you can make your decision. Okay. And at the end of the day, you reshort it again. We want to exit this trade, so you got to keep track of. You're going to want to keep track of what your profit is on the trade, because your profit is going to be a combination of what you're going to make or lose on the long and what you're going to make or lose on the short. I don't know any platform that compiles that for you and aggregates it so you can tell that. You just kind of have to do it manually. Keep track of it. It's not that many trades we're talking about here. So in that case, you should be able to just create a spreadsheet for it to do that. $50 profit is a win. It's time to move on if you get there. 75% off 75 is a big win. 100% is a massive win. Okay. So ideally, 2 to 3 trading days would be great. Being able to hit 50%, 75% in 2 to 3 trading days is an excellent goal for us. All right. Now, what happens if the trade remains flat, which is going to happen over and over and over again, because that's the way the market is. If the trade remains flat and you hit your time frame, for instance, we're saying CrowdStrike is going to do this by next Monday or next Tuesday, and it's still trading at 254, 255. It's moving between a real narrow trading zone. It's staying tight inside of the average ATR. It's not moving. It's not moving on either side of it. It's staying very, very tight within it. Then we can make a decision to pull the plug, find another opportunity. We want to be able to deploy our money on stuff that's moving. We're going to be looking for momentum trades, momentum plays, and that's where we're going to be deploying our capital. If there's momentum doesn't hit it, you get out of it. Now, and you can't look back. You can't, like the week after, go like, oh shit, now look at CrowdStrike. That fits our other strategy, which is buy shit far enough out in the distance from an expiration standpoint that you don't worry about what happens on any given 4 or 5 or 6, 10-day period. And sometimes I've not made mistakes. Sometimes I've been patient to a fault. An example would be Airbnb. I let that roll right back to where my strike is, which was 140. Today I let it roll back to there, and I was at 155 last week. My target was 160 before the end of the year, and I was stubborn and let it roll back. So that's a judgment call when you're playing long-term tickers. In this particular case, you don't have to think about that. You don't have to make a decision. If it rolls back on you, you want to stop the trade at $250 or even at 25%, one or the other, whichever comes first. And we'll start looking for another opportunity. So it's not a long-term option strategy to produce income, although we might be able to produce some income from it if the ticker channels down overnight. We close the short for a profit, and we've got a naked that runs up. Okay, but the strategy is an aggressive turnover strategy to take advantage of catching a move on a tick quickly. So that's the strategy. It's that simple. And what I'm going to do is every morning I'm going to be putting up trades, 1 or 2 trades in for this particular strategy. And given I'm doing that, my long account is just going to sit dormant for a while because I want to get this right for us. I want to be able to take this 3,500 and turn it get us above the PDT rule by Labor Day. That's the goal. Okay, so it's aggressive. Questions, ladies and gentlemen. J-Man's typing. Makes sense. Yeah, I'll give you another great trade tomorrow, J-Man. I'm laughing and I shouldn't be. Tears of not joy. Yeah, we'll get a winner. Um, uh, by Labor Day, Giselle, you'll be able to have your own Bentley. How's that? It'll be a used one, like maybe a 1944 or something like that. So that's the strategy. I'm going to be fine tuning this right along with you guys because I've never run a small account strategy with a group of people before. I've always sat down at my desk with a fairly substantial amount of capital. So this is I'm going to learn. I'm going to be learning this with you guys. Really, I am. But I feel pretty confident that the strategy I have in place can work for us. I feel more than confident. I'm about as close to certain as you can be. Just a matter of picking the right ticks and the right timing, which means entry is really important, which is why the trading channels we're going to want to have. Yeah, it is very risk adverse. It is. I mean, you could grow it faster, Arax. You could grow this thing faster by going naked, by just saying, okay, here, I'm going to do this trade right here, CrowdStrike. Here we go. I'm just going to roll this $700 uh, ticker. I'm going to roll a $700 contract overnight without any hedge. And then CrowdStrike opens up at 240 tomorrow. This will be worth probably less than $500. So I'm a big believer in hedging anyway, as you know, and this is one where we deploy our hedging strategy alongside an aggressive trading strategy intraday. We're looking for moves on the day, all right? And then critical part of this is taking profits, booking profits, ending at least several trades a week with profits. 10% would be not good. Would be less than ideal. But 25, 30, 40% several times a week, I think would work out great for us. Now, as far as how to manage this channel that I created, or this, it's called a category, I guess, and the channels underneath it, I am open to ideas on that because I think that we want to be able to be able to go through that, go through those things, or be able to look at those and go, this is on deck. It's reaching its point where we think it's an entry for us. And I haven't figured out the right way to do that technically on this platform yet. I told my tech guy earlier that I want to do that. He gave me a big So maybe he can come up with an idea on that. If you guys have ideas on that, it's great. But I want to be able to open up like NVIDIA or PayPal or SE or Square, all the ones that are listed here on the left, and be able to say, okay, here's where it is right now in the trading channel. As an example, where's this? As an example, I created this earlier, just goofing around with it. And what I want to do is I'm creating short-term trading ranges for these particular tickers. All right, and with the exception of Zoom and Lulu, they're reasonably priced, so we can play them a little bit easier, right? So I want a short-term trading range, which is basically a 30 to 60-day trading range I'm looking for. The beta, I'm going to put the beta over here and the average true range over here, and where to buy and where to get out. All right, that's what I want. That's what I want to do. So I just started this list. I want to add to that, and then that'll go into this particular channel, into the channels over on the left, and it'll be hooked into an alert. So all of a sudden we'll get an alert that'll pop up down here on the bottom where we type in, and it'll show a something like this. Pops up on the bottom. All right, CrowdStrike at entry point, something like that, and it's an alert specifically designed to go with the small account trading strategy. So that'll be associated, that little magnifying glass. I thought that was kind of cute for the small account. Magnifying glass we can put on there. Yeah, he's going to have to program a bot. It's the only way to catch him, right? Or else I just do it manually until he gets that done. Yeah, he's programmed. He programs bots all the time. He's a Discord guy. It's all he works. He's got a whole bunch of other rooms that he moderates and does work for. He's good at what he does. Nice guy too. He's out in California. He's a kid. I think he's in college or something like that. He knows 10 times more about technology than I ever will. But I think this will be fun, and I'm hoping it'll be profitable. Questions, questions, questions. I don't really, there's not a lot else I can go over. I recovered the capital allocation. We want to keep 1,000 sitting aside for Thursday and Friday scalps. Um, Mr. Stone can help us with scalps. He's excellent at them. I think he's got two or three that he watches very closely. Thanks, Zopa. So scalps will be Thursday, Friday. Expensive ticks that move a lot. I like Tesla um, and uh, and Amazon a lot for that. So that's how we're going to deploy the capital. So you always want to have $1,000 starting now. Hopefully, as this continues to grow, that our the amount we've got set aside for scalping, we can move it up. So we'll get this thing to 5,000. You can move that up to 2,000. Get it to 10,000. Move it up to 3,000. So we can deploy more capital on Thursdays and Fridays to do scalps. And I like Thursdays and Fridays because that's when the tickers are the cheapest, right? This could be fun. It'll create a little excitement in the room. It'll be a lot more activity in the room. I've got to figure out the. I'm gonna have to. I'm going to figure out the right way to manage all the activity and the information, and automate it as much as I can. So bear with me as we roll this out and deploy it. We'll start with the first trade tomorrow morning. Anybody have any ideas for the first trade tomorrow morning? Tesla market open scalp Thursday. Yeah, you could do that tomorrow. Tesla's a good scalp tomorrow. Uh, I don't know where it's going to go, but Stone, I just mentioned. Can you hear me, Stone? I don't know if you can hear me or not. You can hear me? Okay. So you mentioned. I mentioned that we're going to set $1,000 aside for RH. What the liquidity in the chain stealth? What is the liquidity in the chain there on that one? I've played it a bunch of times, but isn't that kind of sparse on liquidity? Yeah, I want to try to avoid those. I don't want to get stuck in something. It's a high beta though, man. That baby moves. Well, it depends because you want to, you also have to be able to get in and out of the short too. So you have to remember you're looking for liquidity on two sides of the trade every day. Yeah, Mr. Stone, I brought up your scalping expertise, which we will be deploying every Thursday and Friday. I suppose we can start one tomorrow with Tesla and Amazon. Is there any other ones that you'd like to scalp? Spy. Yep, yep, yep. I listed in the tray inside the trading live, not the inside the small account trading document. You're going to see a list of highly liquid uh, indexes as well. Ones you guys may not be familiar with, but they've got liquidity and they've got beta and they've got average true range. So those are definitely something we can take a look at scalping. Let me just see what might be a good swing trade to get into tomorrow. Um, so here is somebody. I'm going to throw this chart up. You guys tell me what you think about it. Put it over on. 1 month. Why does it keep doing that to me? Jeez, this is just, I hate Fidelity. I just hate it. Won't do it. Alright, well, let me just throw this over here. And it's going to look like crap, but whatever. That's BYND. This is BYND. That's the 1 month chart. It won't let me switch it to a longer time frame. Frequency. Let's just do the daily then. There it is. So there's the daily on BYND right now for 1 month. Take a look at the 3 month on it. It's on our list. I haven't figured out a trading range on it yet. Oh, I guess maybe I did. Hold on a second. BYND 130 to 160. And it's trading at 131 right now. Its short-term trading range is right here. Boom, boom. That's the short-term trading range on that ticker right now. So that's an idea for us. A couple other ones that I have on there are Zoom. Let me look at Zoom once here. I got a trading range on Zoom short term of 346 to 410. Let's see where it's at right now. It's at 360. And it's under the 200 SMA. So this is another one that I looked at. I'll just post it, put it on the screen here. This is another one that I have listed. So you can see it's trading. It popped under the 200 SMA. Clearly had a bad day today. And its trade closed at 360. I've got a trading range of 346, so it's probably a little bit shy of where we want to get into it. Because it's not right in between, but 410 is the top end of the trading range for the last month or so, last 6 weeks. So that's the stuff that I'm looking at. So if you guys have ideas, I'm going to open up that category for adding in tickers. So Stealth and everybody else that's here, Stone, 88, Giselle, J-Man, Mayberry. Just throw in whatever you want there with your thesis on it. And a chart if you can to tell us what you think is good and bad. Then I'll grab it, give it to my tech guy, and have him start programming alerts for it. I don't know. It'll probably take him a few days to do it, but that's the story, guys. I don't have anything else. Any questions? If not, we finished this in about an hour. Not bad. A little less than an hour. I think it'll be fun. Yeah. It took me a second to get concentrated after today. I haven't had this bad of a day in terms of trading in a while. Concentrated position on a ticker that just got rolled. So my apologies if I was a little distracted. Uh, Fix that tomorrow. With that, I'll sign off and I'll throw this in the. I'll throw this into the. Oh, gee, man, I've got to have Monday. I have to go in, so I'm not going to be here part of the day. On Monday, I have to go get a root canal. Never had one of those before. Yeah. I said to the guy, the dentist, I said, well, doesn't it hurt? Doesn't it hurt a lot? He goes, oh, don't worry about it. Don't worry about it. I said, no, man, you're not the one in the chair. You're the one standing there, okay? So it's not painful, just uncomfortable? Okay. Yeah, I broke off a tooth on the dentist's best friend, popcorn. I was eating popcorn and broke the top of a crown off, and it was the crown underneath the crown is not enough to work with, so they got to do a little bit of drilling down in there and build it back up. So that's enough for that for today, right?